One of the most insane 24 hours that I've seen in a very long time, and it doesn't seem like it's giving up just yet. We've had 10% on the day, low to high, nearly $10,000 for BTC, putting in a new all-time high, but then closing back down into the trading zone. So what the hell is going on? Is Trump able to do this?
Could you imagine Biden doing this? I don't think so.
Touche, Trump. Biden couldn't have done it. I am going to enjoy this next 4 years with Trump in power. Got the absolute most fantastic comeback lines, just like Bitcoin seems to be having at the time of this video. Lots of volatility ahead, but I don't think anyone is expecting any less at this stage of the cycle. And of course, I'm talking about the macro cycle here. We're looking at Bitcoin, cryptos, the stock markets, commodities today, and the real estate cycle. So hit the like button, subscribe to the channel if you are new here. This is your home of macro cycle analysis. Link in the top of the video description. Just click that. It is the free report coming out in 6 hours time. Name, email address, you're not a robot, and then subscribe and you'll be getting the updated version of our report. All right, guys, big things this week. Obviously, we've had the inauguration. There have been some fantastic speeches that have been said by everyone out there. I've very much enjoyed watching that, but we still have more things coming up. The DOGE is going to be an interesting one at the end of this week, obviously with their interest rate announcements. That is something that we looked at yesterday, so this is tentative. We'll continue to see what happens through Friday and Saturday for that decision. Remember, that was the decision that basically crashed the markets in August. That was that downtrend, big time where people were looking for a recession. After that, coming up in the next couple of weeks, we have the interest rate announcement for the US and potentially not going to have the cuts that everyone has been anticipating. Now, a few of the highlights from the Trump inauguration. First being that maybe Mark Zuckerberg isn't a lizard man after all, just checking out the tits of Jeff Bezos' wife. Apart from that, we have the S&P 500 also closing up slightly higher here. The concern from yesterday's analysis was that the volume is slightly dropping off on this rally. It has broken past the 50%. It has broken above the downtrend, but the volume is just dropping off here. Overall, the macro structure is still in play, so any dips down to 5,600 is still very much in the bullish territory here. Basically, the long-term uptrend is still intact. We take a look at the NASDAQ after the inauguration yesterday. Slightly lower close than the open, but still just above the 50% level. That's the short term there, and also above the diagonal downtrend. Volume holding out a little better than the S&P 500, but to the downside, if there were any corrections coming up after this inauguration, maybe it's a sell the news event, right? Well, you still have the long-term structure in play. The macro structure is still there, provided we continue to hold roughly around 19,900, and worst case scenario are these lows back at 17,300 points, and of course the diagonal. So essentially plenty of downside, plenty of downside support to continue to hold up the structure if things change, right? If things get a little bit more out of hand to any of the sell-offs that may eventuate, right? Of course, it's ifs, thens, and maybes, but that's trading, that's investing. There are no guarantees of the black side here. The right-hand side of the chart is what we continue to try to forecast day after day. And essentially, it's been an uptrend. It's been an uptrend for years, upon years, upon years. Okay, so the Dow Jones also has had a close above the 50% levels and above the daily swing top here back on the 26th. The support levels still remain there at 38,000. So no changes there because we have not put in a new all-time high, nor have any of the US stock markets broken down below the key structure here. So April, for the Dow Jones case, you got the April lows and the August low. Now, the next thing that Trump talked about was putting an end to the cost of living crisis. And as he said in his speech, it was, we're going to drill, baby, drill. So maybe there's going to be some effects here on the energies. However, if it remains as it is and we put in another higher low here, you could potentially see the prices continue up. So this is going to be an interesting one to see how Trump works on this, especially when it comes to oil. And of course, there's a couple of oil charts that we also need to watch. But for now, we're just going to focus on the largest one here in the world, the light crude futures. You've also got heating oil here. still holding up above the 50% levels. Nice big move to the upside. We've got natural gas also, well, it's had a slight day down, but still above the key support levels. And the last one here, gasoline futures, also still holding relatively well from this early move to the upside. So essentially, we're just watching this as any sort of signs of the possibility of any inflation coming back. Of course, a big thing that Trump's trying to do is reduce the cost of living crisis for the US. Obviously, the citizens there, because obviously things have gotten a little bit out of hand. We've got very, very expensive prices across the board and for real estate. So the next thing that we've seen over the last 24 hours is another higher close for the top 50 in Europe. So this is also having a bit of a positive effect over in Europe. But like we've been looking at now for the last year, almost a year, this trading range has been playing out and it's starting to put in fresh highs. Now, the white line I have above here would be, well, it goes back to September 2000. That was the high point back in September, so 5,247. Should this get to that point, that would be, at the time, wherever it gets into it, would be almost a new 25-year high. Just 2 days ago, we hit a 24 and a half year high. That price point would be another high point for the top 50 in Europe. And so you're still seeing further upside within this macro bull market and into this winner's curse phase. A little bit more on that in just a second. But the top 50 in Europe, of course, is led by the UK, Germany, and France. The two strongest being the UK, which is put in now or into the third new all-time high here, or basically closing prices, but above the previous top, so 3 days above that. The DAX being the German market, now that's at new fresh highs again. There's Monday's trading bar, another new all-time high there. And for France, you've also had a fresh high here over the last couple of plays. Next up is the Aussie market. So for the Aussie market, we also had a pretty decent day up yesterday on Monday. However, for Tuesday, today, we had a nice big pump up and a bit of a pullback. We're watching this double bottom. It has broken past the 50%, possibly on its way to another new all-time high. The US dollar's been in a pretty strong bull market, a pretty strong uptrend from the September 2024 low. We had the 3-day rule signal a very significant low, and it also came up in August, 1, 2, 3 days from a significant low, telling us the trend was likely going to reverse. Now, from that point, it has gone up 10%. This is on the DXY, pushing up to 110, being that top. However, in the last 24 hours, so this is from the Trump inauguration, is down one of its largest days through this entire move to the upside. Small, little lower swing top forming here underneath 109, but I'll be watching for any sort of closes underneath 107. That's the 50% level from the top, which could continue to bring weakness to the US dollar, which might be a good thing for the US, especially for the exports of US goods. So if Trump is trying to bring home more of the manufacturing to be in-house in the US, at the moment, it's pretty damn expensive to be selling those products overseas. But however they do it, we'll see in the coming months, even coming years, this could be somewhere around a turning point. If not at 110, maybe somewhere around that 112 to 113 are our next resistance levels. So pretty interesting one to watch here, because this is also going to affect the metals. It's also going to affect Bitcoin, potentially even crypto, energies as well. Now, another interesting signal on the currencies is Shapiro's crowded market report on the other currencies that make up the DXY. And you have the commodity currencies like the Australian dollar, Canadian dollar, New Zealand dollar. Commodity currencies, because we do a lot of mining in these countries, right? And the thing we're looking at here are the large speculators versus the commercials in red on the side here. And you're looking at this being in crowded areas, basically towards their extremes. And so the next thing to look for is a failure on a news announcement. So at the moment, you've got the large speculators. These are the guys that you want to short, or sorry, not short, you want to fade. So trade against these guys, and generally, not always, but generally go on the side of the commercials at these extremes. Not all the time. People get this really, really mixed up, especially when it comes to other areas of the market. They're always looking for some signal that always works. There's nothing that happens like that. But this one's going to be an interesting one moving forward. Because if this works out and the commercials are long, very much, almost crowded very heavily here, and the large speculators, potentially even the small speculators, as you can see in yellow as well, are heavily short. So they think that these are going to go down. They would expect the US dollar to be going up because it's basically inverse. But if the US dollar is looking like it wants to come down, this is very, very, very early days, and this might be going up, well, then it seems like the large speculators might get crushed. Now, it's not a tomorrow thing. It might not even be a this week thing, but it's something to continue to watch as this, as the data here continues to build up, with commercials getting even more heavily long here and the large speculators getting more heavily short. So an interesting one that could also spell downside for the US dollar. And that all leads us to the real estate cycle. A couple of comments here over the last 24 hours. Some thinking that this isn't going to work again. I don't know. The history there, over 200 years of a cycle that roughly works out every 18 to 20 years of this 14 up and about 4 down, is something that I've been following now since this bottom here at around 2012, and it is basically played out to a T. Now, enjoy my little red lines here and circles and crosses, right? We're in this winner's curse phase. We've reflected on the rest of the markets. Basically, stock market's up, house prices have been up. This is for the US, of course. Australia tends to lag, and we've also seen Aussie house prices going up. The changing of the guard with the US presidency, I think, is also going to help us forget the past and think that we can only keep going up. It's almost like, for some people, their minds have reset to think that we are way back down at the beginning of a new cycle, now that we have a new president in there doing a lot of potentially great for the world, for the US, so on and so forth. That aside, don't forget where the cycle began from. This is for the US house prices and economy. It began back around 2011, 2012, and it looks like we're still heading up towards a peak somewhere around later 2025, 2026 for US house prices and the economy. We could be in that now, of course, in this 2025 period. So rounding over this top. No one's going to ring a bell for us at the top and tell us that was the exact top. It is all coming straight down. I think it's going to be a little bit shakier than that, and what we've seen over the last 24, 48 hours is definitely playing out like that, with that extreme volatility in this peak. This, in the winner's curse phase, always has that extreme volatility. Well, I think that's a great segue into crypto, with more extreme volatility. Basically lives off volatility. Crypto fear and greed index in the last 24 hours was at 76, day before 76, and it's basically been creeping up into that extreme greed. Now, the little, whatever, it's a warning. Let's call it a warning. Is the lower highs here for the market sentiment as we have continued to push slightly higher into new fresh prices for BTC. Forget altcoins for the moment. This one's obviously mostly based around Bitcoin, even though it's called the Crypto Fear and Greed Index. Bitcoin obviously has been at some sort of extreme greed level with Trump getting in. Didn't make any mention of it in any of the speeches, but the warning here is that the market sentiment is not pushing to new fresh highs in this period. And I'll get to that with the historical chart in just a moment, which shows it a little bit better on this one here, whereas this just sort of makes it a bit crowded. But anyway, let's move on from that point, and then I'll get to that in a sec. The liquidations also pretty good overnight. It's good to see this flush out, especially with that high emotional events. The last couple of days has been very, very big. You had $1.1, $1.2 billion on the 19th, and then the 20th, we've now seen nearly $1 billion there. What have we got? About 800 million. Just as I started recording, now it's dropped to about $750 million. Another good sign here is the daily exchange volume. So good sign that there is interest in the market, even though the prices are sort of sitting where they are for BTC, you know, that 102K as I film this. The good news here is that you're starting to see the volume come back to the exchanges. The last thing you want to see is the volume continue to drop off, especially at these pretty critical times. And the critical times being, well, of course, the Trump inauguration and more of the eyeballs being on the market, especially with the Trump and Melania meme coins that were just released, right? Ideally, I think this should have been much further over 100K and potentially even breaking past these highs on such a significant event. You know, you had basically the world's eyeballs on Trump over the weekend, launching meme coins, and the 7-day exchange volume just was not able to break past those highs. It could be said that, well, a lot of the exchange volume was on the DEXs. It was also that some exchanges weren't able to they weren't able to list Trump or Melania for several hours, and that could have potentially missed out on some of the volume. So there are some other reasons there why this wasn't breaking past the highs, but nonetheless, very important one to keep watch of. Now, the USDT dominance has been an absolute standout chart to assist with where the market's going. Are we about to see a big breakout? We're about to see a breakdown. You know, where is the money flowing? If this chart is going up, not great for the bulls in Bitcoin and crypto. If it's going down, then it is fantastic for the bulls. And just yesterday, it basically broke down past these lows, past 3.8%. It failed to get, let's move this so you can see, it failed to get to the low here at 3.7% and fell just short before reversing all the way up and closing above the diagonal downtrend. So again, it throws the whole market back into uncertainty because you're back in the trading range here. Where is the money going to go? That's basically the question there. You could have a meme there of the Tom Cruise thing, you know, where's the money, right? The money at the moment is still sitting in USDT dominance. It doesn't know what it wants to do. At the moment, it's in the weaker half, which is better for Bitcoin and cryptos, especially if you get the breakdown here. But if it starts to break higher, break past 4.2%, get towards 4.6%, not great things are going to come from that, especially for BTC and probably ETH and some of the other majors there. You're going to see a lot of money flushing out. Now, just as a nice little example here, why I think longer term, we're still going to see further upside for Bitcoin and cryptos, even if this does come back. I've now inverted the chart, and you can see from here, you've got plenty of highs coming in. If you just take a quick look at that chart and you ask yourself, longer term, do you think this chart is going to break down, or is it going to break out to the upside? Now that I've inverted it, this is where you definitely want to see this chart go, and that's going to be good for the bulls, for Bitcoin and crypto. If you see this chart do this, that's going to be bad for the bulls in Bitcoin and crypto. Basically, if you're going long, that's going to be bad for you, right? So, you know, just ask yourself there, you've got a nice, you know, triple, almost 4-time top there with some higher lows continuing to form. Even if we get this pullback, provided it doesn't go too much further than 5 to 5.5%, I think we could still see some longer term upside there, which is going to be absolutely ballistic for the bull market. So that's my F-off massive bull market here. You can see the pattern is pretty much doing very similar things to what happened in January, February, March of 2021, basically that first stage of the mania before it really did dump. So that was the market dumping there and everything flowing back into USDT. So the other flip side to this is it could remain in this zone here, basically just bouncing around like it did for about 4 months, and the market still go crazy. But you're just basically sucking liquidity from different areas, and then each different sector is pumping. So maybe it's the altcoins that are pumping, maybe it flows back into BTC, and everything else dumps and Bitcoin's going up, because at the end of the day, you still have the same dominance in the USDT, well, the dominance of USDT. What you really want to see is a really significant breakdown, or I guess if you think it's over, then break back to the upside. Now, speaking of dominances, Bitcoin dominance is on the rise again. You've got some higher lows forming here. It's above the 50% level, and it seems like the money is flowing back into BTC, or at least less into altcoins. Could this be one of the final pumps? Hard to say at this stage, but the main thing you can say, well, it's above 50% in the short term. It's above the longer term 50% here, at roughly around 56 and 55. Therefore, as a whole, Bitcoin is still the safer option, just according to the chart, especially if you don't have the time to go through and try to trade a dozen or 2 dozen different altcoins and trying to find those little memes. This is just saying that Bitcoin, for now, is still the safer option for those that are time poor or maybe don't have the experience in trading. Over to the BTC chart, and like I looked at in the intro yesterday, 10% low to high, 9,900, call it a $10,000 bar, slightly getting above the previous old all-time high. So that was 34 days underneath the old all-time high, 33, and on the 34th day it broke out. It didn't even get $1,000 above or 1% above that top before slamming back down and having a relatively low close on the bar, which is not a very strong sign. However, the closes above the 50% level, so that's of the entire range now. You can take this all the way back, and that's the lowest point, and now that's the highest point. A close above the 50% is at least still in the stronger half, and ideally over the next day or two, it continues to close above 103. That's its previous top, and it could get back into that position of strength and continue higher. Now, a big one that's overhead, let's throw it on the weekly chart here, is the diagonal that basically encompasses all, well, at least from 2017, all of the all-time highs. It did go a little higher here in April for a moment, and on a weekly basis, never closed above that level. So I don't like the looks of this unless it breaks out pretty strongly, right? So we're going to have the bulls that are saying, well, it's a given. It has to go higher. It's got to go to 150. It's got to go to, I don't know, 250. People have got some really, really crazy ideas of numbers out there, especially if you're asking Michael Saylor. For now, you got these highs all hitting the same level. It's connected to the 2017 top and the 2021 top, now with two more significant data points of it hitting. So if it's able to break through, things could get very wild, and that would coincide with the USDT dominance breaking down. So that's why I'm still very bullish for the upside. That could go really damn crazy, but it could just be crazy, could be just easier for BTC, I mean, to be holding BTC for any sort of crazy move here. Yes, altcoins go crazy. Maybe you've made your 10 or 20x. You know, if you're an altcoin trader, great. Go for gold if you want those sort of longer term holds. I'm just looking at things that are going to make my life easier, especially in these crazy times like we've looked at with the volatility in the market. What is almost like one of the easiest things to do? And if you find yourself in that situation, maybe, like I said, you're time poor, you've got other things going on, maybe you're wondering, what the hell do I do? To me, I think it's going to be an absolutely amazing sign if it breaks and holds above this level. Bitcoin dominance is probably going to shoot up as well. USDT is probably, no guarantees, but it's probably going to collapse from that point. But until we get there, it's still in a holding range here. It's basically, it has not played its cards yet. It hasn't shown us what exactly it wants to do. So although I'm hyped for that breakout to the upside, hasn't happened yet, and we're still in a precarious position. Like I talked about yesterday, I would say it's cautiously bullish from this point, unless, and we have to look at it, a breakdown of 99K and then closes underneath that level with rejections at the 50%. That is going to be early warning signs that things are not playing out as they should, to give us any sort of very significant move to the upside. And I think from that point, if it's able, well, if it stays there, not going to be great. And you're going to have come back and test the 90s and 80s. Not something we really want to see from this point, especially after putting in a new all-time high as the president was inaugurated. Okay, so that was BTC. Let's just stick with the good stuff for now until any of those things happen. It hasn't happened yet. We haven't seen any breakdowns of 99, but just keep that in mind should things get to that point. Even the total cryptocurrency market cap is also holding up at these levels, obviously made up mostly of BTC. So it's still above the 50%, still above those tops, even though it had a little bit of a wick out above 3.65 and 3.55 trillion. It's still holding at 3.37. So good, well, at least short-term signs are still looking healthy. Ethereum, short-term signs still looking okay here. That's why, because we haven't seen any of these significant breakdowns of the large caps there, you had your XRPs going ballistic. Nothing has shown its hand. It's still in this trading range. And if Ethereum does do its big thing and push past these tops, that as well is going to be a massive signal on its own. So we haven't seen the breakdown yet that basically shits the bed and ETH is over. And if it is able to hold, close above 3,700, 41's next, and then I think we head towards 5,000. Let's start there and then see what happens from that point. So still not doing too bad. Here's your 24-hour chart there. Big volume, wicks down, wicks up, still in the trading range. Next up is Sol. It closed back down at another lower day, but still on 50% at 230. So like we said with yesterday's video, while it holds above 230 bucks, it can consolidate and then attempt to put in higher prices again. But for now, it's basically back in or back underneath the previous old all-time high, attempting to consolidate for another move to the upside. SUI, on the other hand, as we've been covering now for weeks, is continuing. I'm on the SUI US dollar here, and I'll look at the BTC pair as well, because that's continued to break down. This has continued to fall and falter underneath the previous old all-time high, which, as I've referenced before, could be similar to what happened in March. Doesn't mean the game's over entirely. It could just be a longer pullback and a longer profit taking, consolidation, and waiting for the next pump. Do note, 154 days low to high, and the last one was 160 days low to high. Okay, so if this does break $4, that's going to be one of the bigger triggers. That's probably going to send it closer towards $3, and then you're going to get that bigger correction compared to the average correction here. And SUI BTC has also been on a significant decline here, so it does seem like the interest has been lacking. You see similar sort of things happen previously, and that led to a much larger decline. Yes, big bounces, but it led to a longer decline overall. While we're on the topic, let's have a look at XRP, back to 310, but still underneath the 50% level, in a bit of a no man's land, as it's above the previous high here at 290, but still below the 50% and the previous top at 340 and the previous all-time high. So it's not the worst position. If it consolidates here, that's fine. It's probably going to break through to new fresh highs there. And last couple here, we got Trump on the decline here, the 4-hour chart. Watch for any sort of breakdowns from $20. That's basically where that the gap formed there on the MEXC chart. Could still be some significant volatility over the coming days. And DOGE USD, of course, with the mention there of, I guess, the Department of Government Efficiency. I think I heard Trump talk about that. You've got the Doge coin. Lows there at 30 cents and the 50% level around 28, and then another low there at 26. So 26, 28, 30 cents. That zone is going to be a critical level for Doge to hold over the coming days to then mount the next attack at the next higher price. A breakdown of those levels probably going to send it back to around 20 cents. So if this pattern for BTC continues to play out, it's not going to be great for the long-term picture here. Ideally, we continue to put in higher lows, form support above roughly $99 to $100,000 and start to break out, because that widening wedge at the highs, the megaphone pattern, is not the greatest thing in the world. That essentially represents distribution at the highs. You got the largest swings happening at the tops. We did have a good week last week, a nice high close there, especially as it engulfed the previous week. And on the monthlies, we also had the key reversal get wiped out starting this month, actually, in January. So there is the possibility, as I've looked at with heaps of other things in today's video, but we still need to be on the lookout, especially as prices are into the new all-time highs. Now, of course, I could fill another half an hour's worth of content here, but I'll leave that for this week's report. Link in the top of the video description. It's out in roughly 6 hours. Name, email address, and you will get the updated version here. So we'll be back tomorrow with the next update. Like, subscribe, and I'll see you then. Cheers.